Good evening, you're watching TKC Daily, where we make sense of the global events with straight facts and sharp analysis. Let me start by thanking you all for watching my daily coverage of world affairs. We have recently crossed some 1 lakh views on YouTube channel. While this may be a small thing for many, but for me, it is an accomplishment. So thank you very much for giving me your time for watching my videos. I read all your comments and very soon I will come up with a video answering them all. So keep those comments coming in. Alright, tonight on the show we are breaking down the biggest global headlines. We are starting with China versus USA. Trade tensions are back in the spotlight after President Donald Trump imposed 104% tariffs on China and China retaliated with its own 84% tariffs. However, China wants equal footing talks with the US before any tariff deal is signed. Is this a sign of strength or desperation from China? We will break it down. Then Trump's Iran gamble. The US wants Iran to completely give up its nuclear program. Will this pressure tactic work, or will it push the Middle East closer to another conflict? Meanwhile, Gaza's humanitarian crisis is hitting a horrifying new low. The UN chief has called Gaza, and I quote, a killing field. What led to this strong statement, and how does it say about the state of the war? And back home, big news from India's central bank. The Reserve Bank of India cut the repo rate by 25 basis points. What does this mean for the Indian economy? Will loans get cheaper? Will EMIs come down? And how will this impact you directly? We will tell you everything. All this is lined up on the show tonight, so let's get started. The US-China trade war has once again taken the center stage and making global headlines after US President Donald Trump slapped a massive 104% tariff on Chinese goods. China now has retaliated with 84% tariffs on the US goods coming into China. The move has triggered fresh tensions between the world's two largest economies. China, however, has also kept the negotiating channels open by responding, and I quote, equal footing in dialogue with the United States is needed. In a new white paper released by the state media, China argued that economic differences should be resolved through mutually beneficial cooperations. Mutually beneficial cooperations, not aggressive tariff policies. But at the same time, it has vowed to fight back till the very end, and new 84% tariff by China is step in the same direction. Seems like the situation is getting even more tense. None of the side is ready to step back. Beijing insists it does not deliberately seek a trade surplus with the US. Instead, it claims the trade imbalance is a result of America's internal structural challenges and the global division of labor. But the reality is that Trump tariffs have exposed a critical vulnerability in China's economy. What it is? Its dependence on exports. China is now trying to tariff-proof its economy by boosting domestic consumption and investing in key sectors. But experts say the country remains deeply exposed to external shocks, especially when the US remains its largest trading partner. Meanwhile, China has also reached out to other nations like India to mitigate the fallout. The Chinese embassy in New Delhi said both nations, India and China, should stand together against the US's abuse of tariffs, which they argue deprive global South countries of their right to development. Trump, however, seemed unfazed. In a speech at the National Republican Congressional Committee dinner, very big name, he bragged about the impact of his tariff policies, claiming that tariff-hit countries are pleading and dying to make a deal. This is what he said, dying to make a deal. Trump has also signaled that he is willing to work on tailored deals with key allies like Japan and South Korea. New reports suggest that Italy's prime minister is expected to travel to the US soon. To do what? To negotiate a trade deal. Meanwhile, South Korea, facing a 25% blanket tariff on its exports to the US, is trying to negotiate its own deal. But its political crisis has weakened its hand, and with the current country without any president, the situation is difficult. Global stock markets, which has shown some signs of recovery, sank once again after President Trump's 104% tariff announcement on China. The uncertainty is not just hurting governments, but also businesses. Even unexpected voices like Mr. Beast, the world's biggest YouTuber, has weighed in. What did he say? Mr. Beast, who owns a chocolate brand called Feastables, I'm sure you know that, said on X that thanks to the new tariffs, it is now cheaper to manufacture their chocolate bars outside the United States. He warned that such policies could be devastating for small businesses. China, for its part, has vowed to fight back till the very end and is also following up on these threats. But as the tariff war escalates, the real casualty may well be the global supply chain, small businesses, and guess who? You and me, the customers worldwide. Donald Trump has some unfinished business with Iran. Back in 2018, during his first term as US President, Trump pulled America out of Iran's nuclear deal, officially known as the Joint Comprehensive Plan of Action, or in short, JCPOA. The deal was very simple. Iran would limit its nuclear activities in return for relief from economic sanctions. Trump called it a bad deal, accusing Iran of using the funds to fuel terrorism through proxies like Hamas and Hezbollah. He then reimposed tough sanctions on Iran, hoping to cripple its economy and force it back to the negotiating table. The classic Trump. Fast forward to today, 2025, Trump is back in power, and so is his old strategy, maximum pressure. Within days of taking office, Trump signaled fresh sanctions targeting Iranian oil exports and warning other countries against dealing with Tehran. But this time, Trump is adding a twist of diplomacy, a diplomatic twist. He has offered direct talks with Iran, even sending a letter to Iran's supreme leader proposing negotiations for a new trade deal. Talks are now scheduled in Oman, but the gap between both sides remains massive, huge. So what does Trump want? Washington's demands are quite clear. 1. A full stop to Iran's nuclear program. 2. No uranium enrichment, not even for citizens' use. Number 3. No funding for Hezbollah or the Houthis. And number 4. Strict inspections and verification mechanism. In simple terms, Trump wants Iran to completely dismantle its nuclear capabilities, just like Libya did in 2003. But will Iran agree? That's highly unlikely. For Tehran, its nuclear program is both a source of pride and a security guarantee. Iran denies wanting a nuclear bomb, but the knowledge and capability it has built over the years are seen as a strategic asset. So moreover, Iran's economy is in ruin. Sanctions have led to a high inflation, a crashing currency, and rising public frustration. Some Iranian policymakers might be tempted to strike a deal just to survive economically. But then you have a problem. The problem is Iran's hardliners. They see nuclear capabilities as essential, especially after watching what happened to Libya and Iraq, countries that gave up weapons programs and were later invaded. So what if talks fail? Important question. The risk of military action rises sharply. Trump has warned Iran explicitly, negotiate or face consequences. Israel is even more blunt. Prime Minister Netanyahu has compared the desired Iran deal to Libya's total disarmament, a model Iran hates. But attacking Iran's nuclear facility won't be easy. Many sites are buried deep underground. Experts believe that airstrikes alone may not work. Then what? Ground operations could be needed. And that's dangerous. Very dangerous. Trump has long promised to avoid new wars, but a full-scale conflict with Iran could become exactly a long, messy, expensive war in the Middle East. So the bottom line here is that Trump's strategy is clear. Maximum pressure backed by talks. But Iran's response is unpredictable. Unpredictable. They could compromise or they could double down. Either way, the world is watching, we all are watching, and the stakes couldn't be higher. The UN Secretary General used the harshest word far to describe the crisis in Gaza. He said Gaza is a killing field. Civilians are in an endless cycle of suffering. But why did he say this? It all began after the collapse of a temporary ceasefire between Israel and Hamas in early March 2025. Once the ceasefire ended, Israel tightened its blockages, cutting off food, cutting off fuel, medicines into the Gaza. Since then, Israeli airstrikes have intensified. According to the Gaza's health ministry, over 1,400 Palestinians have been killed in just last 2 weeks. In total, since the war began in October 2023, over 32,000 Palestinians, mostly women and children, have been died. This is the official data. Unofficial data is even worse. UN Secretary General accused Israel of violating international humanitarian law, saying that blocking aid from reaching civilians is not just a tactic, it's a crime. He warned, and I quote, "The current path is a deadly end and morally unaccepted and legally unjustified." Israel, on its part, rejected these accusations. Its foreign ministry claimed that over 25,000 aid trucks had entered Gaza since October, arguing that there was, and I quote, "no shortage of humanitarian aid." But UN agencies on the ground completely disagree. 6 major UN agencies, including UNICEF, WHO, and the World Food Programme, painted a grim picture, a very worse picture. 1 in every 3 children under the age of 2 in northern Gaza is now suffering from severe malnutrition. UN-backed bakeries have stopped working due to lack of fuels. 97% of Gaza's water is unfit for human consumption. Hospitals are running out of basic medicines, basic painkillers, antibiotics, and anesthesia. Over 85% of Gaza's population, that's around 2 million people, have been displaced from their homes. The World Food Programme called Gaza's situation, and I quote, "beyond catastrophic." They warned that famine is imminent if aid does not reach people urgently. UN Secretary General's use of the term "killing field" wasn't just symbolic, it was a desperate warning, a warning that highlights the Gaza's situation today. And it is not just the war zone, it's the humanitarian nightmare. The real question is, will the world act, or will Gaza's civilians continue to pay the ultimate price? In a widely anticipated move, the Reserve Bank of India cut the repo rate by 25 basis points, bringing it down to 6%. This marks the second consecutive rate cut by the central bank this year. But while the rate cuts were on the expected lines, it was the RBI's revised GDP forecast for financial year 26, trimmed from 6.7 to 6.5, that sent shockwaves across the markets. The downgrade signals rising worries over global trade tensions, slowing exports, and weakening domestic momentum, domestic consumption. So why has the RBI cut rates again? The primary reason is to support economic growth in an environment that's becoming increasingly uncertain. Global trade tensions have intensified dramatically, with the United States slapping a 26% tariffs on Indian goods and an eye-popping 104% tariffs on select Chinese imports. Such protectionist moves risk triggering a full-blown trade war, slowing global growth, impacting India's exports, and tightening liquidity conditions worldwide. Against this backdrop, the RBI's rate cut aims to inject more liquidity, lower borrowing costs, and keep the domestic economy on a recovery path. But the rate cut comes with its own set of challenges. Lower interest rates are good news for borrowers. Home loans, car loans, and business loans could get cheaper. However, it is a double-edged sword. Fixed deposit returns, FD returns, and other saving instruments could see further decline. Who will it impact? Impacting savers and retirees. More importantly, the RBI's downgrade revision of GDP growth suggests that consumption and investment trends, through improving, are still fragile. They're improving, but they're still fragile. At a macro level, the RBI highlighted some positives. Manufacturing is reviving, urban consumption is slowly picking up, and business sentiment remains reasonably strong. But the elephant in the room is global uncertainty. Rising tariffs means India's exports competitiveness could take a hit. Sectors linked to global trade like IT, auto components, textile, metal, and pharmaceuticals are likely to feel the pressure. Additionally, if global growth slows down, it could weigh on the commodity prices and remittances, both of which are vital for India's economy. For individuals like you and me, the immediate impact will be mixed. Borrowers may cheer lower EMIs, but investors chasing safe returns will feel the pinch. Market-linked investments are likely to stay volatile, especially as foreign investors react to global developments, global news. The stock market's sharp reaction, with Sensex falling over 400 points post RBI's announcement, reflect these underlying worries, all the worries that I have told you. At a larger level, this move reflects the RBI's balancing act. On one hand, it wants to support growth and ease financial conditions. On the other hand, it remains cautious about rising inflation risks, currency volatility, and external shocks. The coming months will test the fine balance as India navigates both domestic vulnerabilities and global headwinds. In short, while the RBI has done what it could, cut rates to boost growth, the bigger battle lies beyond its control: trade wars, geopolitical risks, and global shutdown. It will continue to dominate India's economic outlook. The road ahead looks bumpy, and both policymakers and investors will need to stay nimble. And that's all I have for you on the show tonight, dear viewers. I will see you tomorrow. Until then, take care and good night.